Learning Unit 7, we delve into a bit more detail on our concept of debtors and creditors. So, quick recap, we've dealt with debtors and creditors since Learning Unit 2, when we introduced them to you in the accounting equation, how to analyze transactions when you interact with parties in your business where you don't necessarily receive or pay the cash immediately. And now in Learning Unit 7, we really just focus on working with them in a bit more detail and how to record their transactions. Okay, so debtors, also referred to as accounts receivable, or in general just receivables. Okay, so a reminder of what a debtor is. A debtor is a person or people or a business that owes our business money. Okay, typically in our module, it's because we sold goods to them. We had a sales transaction and we didn't receive the cash straight away. So they owe my business money. And remember, they are classified as an asset. Okay, the reason for this learning unit is this is the learning unit where we teach you how to keep individual debtor accounts. Okay, so that we are able to provide a statement to each debtor. So we have a pinpoint accurate record of what each debtor owes us. And we can also cross-check whether we've recorded all their transactions correctly. Okay, so we do have the journals, and it's very important that you understand at this point the journals in Learning Unit 4 and 5 and 6 are very much still present and they're still there. We still do them. So in no way does any of this replace a journal, but the journals give us totals at the end of the month. So the journals will tell us how much in general we sold to debtors. The journals don't summarize individual debtor transactions. So that is why we then do something what we call a debtor's ledger, because that allows us to do a statement for a debtor. So every debtor that we have will get their own debtor's ledger. We use the journals as, I want to say, as a starting point for transferring information to the debtor's ledger. So the journals are very much still there. They very much record all our transactions, but we also, over and above the journals, we need to capture every debtor's transaction in their individual debtor's ledger. Okay, please go through page 206 to 209 in your textbook. Take a note of the layout of the debtor's ledger, and there's also a activity that you can do on VC Learn relating to your debtors. Okay, over to your creditors, also referred to as accounts payable, or just a payable in general. So that's someone that I owe money to. Important, obviously, creditors and debtors, they kind of work in inverse. So it's quite an easy concept. If you understand the one, you should understand the other one. But the same principle applies in this case as to debtors. So creditors, people we owe money to, we bought goods from them. Not enough to just have journals with general summaries and totals of all the transactions put together. We need individual accounts for each creditor so that we can see at the end of every month, how much do I owe this person? And I can also use this to confirm whether I've journalized all the creditors' transactions correctly. So the creditors ledger enables us to do this, draft individual account statements for all our creditors. Again, same principle as with debtors. The journals help us to populate the creditors ledger. The journal still exists, and we typically use the journal to, again, not only populate the creditors ledger, but we can also use it to confirm the accuracy of our transactions in our creditors ledger. The layout of a creditors ledger, please take note of that. It's exactly the same as a debtors ledger, but because a debtor is an asset and a creditor is a liability, your debits and credits swap around. Okay, please remember that. You can also work through an example on page 211 to 214 of your textbook.